Welcome back to the Pearls and Perils podcast. I'm your host, Peter Kay. If you are watching on YouTube, hey, I'm back. If you are listening on Spotify or on an audio platform and you want to see the visuals, head over to YouTube at the Pearls and Perils. It has taken me a while to come back to YouTube. I'll be honest, after I posted my last video and the views were so minimal, I'll be real, I was just like, I can't do this YouTube thing. You know, when you put so much effort into something, time into editing, recording it, thinking of the idea, and then just to see the crickets, I was just like, do you know what, YouTube, I'm gonna come back to you when I can, but I'm here now. And in today's episode, I want to share with you my strategy of how I'm planning to have over 100K invested by the time I'm 40. I'm currently 30, I'm 31 in January 2026. And just to think that I'm now still in my early 30s, but seeing how quickly the first year of my 30s has gone, it's really got me thinking and reflecting. And I recently just went down this rabbit hole, hence this video. I took some time recently to have a look over my investment portfolios. So I had a look at my general investment account and my stocks and shares ISA. And what I essentially did was I had a look at my return over the last few years since I've had those accounts. But before I get into that, I'll give you a little bit of my backstory and my journey. So I started investing at the end of 2019. And what actually got me to start investing was I got to a place in my life where I was thinking, I don't want to work till I'm 70. Like that, I feel like that is my motivating factor. I don't want to work until I'm 70. I don't want to get to a stage in my life where I can only retire when I've got a couple of years left and who knows what health I'll be in at the age of 70. I want to be able to live my life now. So I read Rich Dad Poor Dad. I think I read that in 2019, and that's kind of where the cycle started of wanting to get into investing. And I think for me, I know a lot of people have read that book, and most people, you know, when you read that book, you kind of get into this idea of wanting financial freedom and all of that stuff. But for me, what Rich Dad Poor Dad motivated me to do is to really start researching into investing more. And what I found was just how accessible investing actually was. You know, gone are the days where you need to have thousands of pounds to get started. You can actually access the stock market with a lot less. And that's what it was in my case. I had a friend of mine who she shared her free trade referral link with me. I signed up to free trade, got my free share. I think at the time you only needed to top up at least £10, which I did. And that's how my investment journey started. Started with not much knowledge, but I had a lot of motivation, and what I wanted and what I still want is that idea to have financial freedom. What that looks like for me has evolved over the last few years, and also with time, my knowledge has grown, my knowledge on investing has grown, also the clarity that I have on what I actually want for my life, and also what financial freedom looks like to me, that has also evolved over the years. And so starting my investing journey just with free trade, which I still have today for my general investment account, to now having my stocks and shares ISA, which I have with Vanguard. But one thing I want to say before I kind of get into the rabbit hole that I got into and how I'm now on this journey of getting my investment portfolios to over 100K by 40 is that when I first started investing and I looked at what the capital gains tax allowance was at the time, you know, end of 2019, I believe it was around 12,300 off my memory. And I remember thinking, oh, that's fine. I'm not going to have profits like that anytime soon. But what I didn't realize in my naive 25-year-old mind was that tax laws do change, financial policies do change. And what has happened since then is that the capital gains allowance in the UK has reduced significantly. I think now at the time of this video, I'll put the figure up. I know it's definitely a lot less than 12,300, which it was at the time when I opened my general investment account. And the reason why I'd opened that, because again, I thought to myself, oh, you know, I'm not going to have to pay tax for a really long time, and I don't plan to sell in the near future. However, now, 5 years plus later, I'm in a position with my portfolio where if I was to sell some of my shares, I may potentially have to pay capital gains tax. So that's not something I thought about at the beginning. And that's one thing I wish I may have done a little bit differently. And I opened up my stocks and shares ISA just over 3 years ago now. And that I have opened with Vanguard. In that in my stocks and shares ISA, I have a range of funds that I invest in. And for me, the way that I see my investment portfolios is it's something that I'm doing for the long term. I'm not here speaking to you from a place of my investment portfolios are huge. They are not. Across both my general investment account and my stocks and shares ISA, I have under £10,000 invested. I won't say the exact number because, you know, the Jamaican in me won't allow me to say what the number is. But what I will say is that it is over 4 figures and it's just under £10,000. But I'm sharing this because I want, one, to inspire people like me that are also on this journey. And at times you may feel like it feels so far away or feels so impossible because you're just an average person with an average income. And it almost feels like just this wishful dream. But looking at my numbers and also reflecting back at what the returns that I've seen over the last 5 years since I've started investing has shown me that I can actually have over £100,000 invested by the time I'm 40. And for some of you watching this, that might not sound like a lot of money, but for someone like me who has, you know, grown up struggling, you know, wanting a better life for myself. When I say struggling, I'm not coming here to say that I missed meals and I was on the poverty line. No, I had lots of difficulties having moved to the UK with my family, the immigrant stream, coming here for a better life and things not necessarily panning out how we thought that it would. And having to really just fight for everything I've ever been able to achieve. Having a lot of roadblocks on the way, facing a lot of issues. Maybe one day I'll share some of those things. You know, this podcast is called the Pearls and Perils for a reason. Hopefully you can't hear the sound outside, but if you can, I'm just going to keep going anyway. Otherwise I'll get distracted and then this video will never see the light of day, but we're not going to let anything stop us. So I started the Pearls and Perils in order for me to share the realness, in order for me to share the highs and lows of life as someone who is working on building a life that she wants for herself, as someone who has a big vision and is really, really motivated, and not just motivated, because at times I'm not motivated. I'm really passionate about building a better life for myself. I'm really passionate about breaking generational curses, being able to do some of the things that my parents weren't able to do, making the sacrifices that they've made in life worth it ultimately, and making the life of future generations a lot easier. You know, things that I would have wanted or even my parents would have wanted for themselves, making that a reality. And that is where my desire for a better life comes from. It's not just to have a comfortable life. I'd say my life right now is comfortable, but it's not where I want it to be. And so that's why I'm sharing my journey. I want to share the highs. I want to share the lows. I think sometimes you can come online and you can look at someone's life and think, oh my gosh, I'm so far from that. How am I ever going to become a millionaire? Like, that's so far-fetched. And even if that's not your dream, that doesn't matter. I'm sharing my story because I want to show you the importance of not only having a vision, but also having a plan and being able to make the sacrifices that you need to make in order for it to happen. So that's why I'm here. And if you're interested, stay locked in. If you're watching this video right now and you haven't already liked, please like, subscribe if you're not already subscribed. If you are listening on an audio platform and you're not subscribed, then you already know what to do. Now let's get to the numbers. So I was reviewing my numbers, got my notebook here so I can stay on track. Because, you know, when I get passionate, I go off on a tangent. But yeah, so I was reviewing my general investment account and having a look at the returns that I've had over the last 5 years. And then what I then did was used a compound interest calculator to project potentially what my investment portfolio could be over the next 10 years by the time I get to 40. So what I did notice was that my investment, oh, I'm on the right page. No, I'm not. Let me pause. Now let's get to the numbers. So I reviewed my general investment account, and what I found was that over the last 5 years, I've had an average return of 26.4%, which is extremely high. Show me a savings account that has an average interest of 26%. It's not going to happen, which is why when it comes to investing, as much as you can have high returns, you can also have very low returns. But for me, looking at that and seeing, wow, 26.4%, and looking at the context to which I've started investing, I started at the end of 2019, very small amount. Over the years, I've done dollar cost averaging, or pound cost, because, you know, it's in pounds. But essentially what I've done is every month I've put some money into my account. There have been times when I haven't invested. For example, this year, I haven't invested as much as I've been focusing on traveling more. And there was also other things that I wanted to invest my money in that weren't necessarily in my portfolio, but in the portfolio of myself and life. And so I haven't invested as much this year. But looking at the fact that we had a pandemic, We had so much uncertainty during that time, high levels of inflation, a war, so many things going on. And yet I've still had a return of just over 26% over the last 5 years. So then what I did was I got on the rabbit hole and I said, okay, let me have a look at my stocks and shares ISA. I've had that for just over 3 years with Vanguard. And for that, my average return is 16%. It's about 42%, so divided by 3, that's how I got 16% average over the last 3 years. Again, similar context. Well, not necessarily the pandemic, but we were kind of coming out of it 3 years ago. Wow, time flies. But looking at that and seeing those returns, that's where the rabbit hole has really kicked in. So then I used a compound interest calculator. I rounded up my total. That I have across both my investment accounts. And then what I did was I based my projections on the following that I'm going to share with you. The factors that I put into the compound interest calculator were the following. So I put my total investment portfolio value across both of my accounts. And then I put in, if I was to invest an average of £200 a month across the year and increase my investment amount annually by 10%, if I was to have an average return of 16% across the next 10 years, I will have over £100,000 invested by the time I'm 40. And for some people, you might think that's not a lot of money, but for me, that is super significant. I'll get into why the £100,000 figure is significant in a moment. But for me, just seeing that what my portfolio is right now, as I said, it's under £10,000, could potentially over the next 10 years, assuming those conditions are met, be well over £100,000. That for me is phenomenal. And bear in mind, this is me just investing here and there when I can. I've not invested large amounts of money over the last 5 years. Everything I've invested is money that I don't need right now. It's not my emergency fund. If there is an emergency, I'm not going to tap into that money. It's just me putting small amounts of money away for my future. But just seeing the potential of what that could grow to really motivated me and really got me on this rabbit hole. And that's why I'm sharing this video with you today, because I want to show you that small and humble beginnings are still important and you should still invest in yourself, even if it's a small amount. But I also have a few variations to show you because, again, past returns are not guaranteed. And that's also why I've not based it on the average across both my portfolios. That would be a lot higher than the 16% that I've just shared with you. I've done it slightly less because, again, I'm trying to think of risk. I can't predict the future. I don't know if my portfolio is going to perform as well as it has been. It may not. There may be other factors that could impact it, but I'm trying to do it in a way that will be realistic and just also to give me different scenarios that I can work with to help me to make my investment decisions. And so if I was to get an average of 14% return, so keeping the same conditions I've said, investing at least 200, an average of 200 a year, increasing my contributions, increasing my investment amount by 10% a year, because again, I want to think of inflation and also the fact that my income is likely to increase every year. And if it doesn't, I can still make adjustments in my budget in order to make that happen, making it a priority. If I was to have an average of 14% return, I'd have just under £95,000 across my investment portfolios. If I was to get an average return of 12%, I would have just over £80,000 invested. So still very significant. But again, those are based on quite high levels of return. Now, I've done it at a smaller amount. Wasn't sure if I was going to share this because then you could probably figure it out. But it doesn't really matter. I'm going to share it anyway. Worst case scenario, if I'm to have all the figures that I said, my average of 200, and I was only to see a return of an average of 5% over the next 10 years, I will have just under 60, I was going to say 600,000. No, I would have just under £60,000 invested, which is still very significant. At 40, I would not be mad if that was a circumstance that happened. And why, another factor I forgot to mention is the fact that this is just based on my general investment account and my stocks and shares ISA. My pension is completely separate. I'm not factoring that in. I'm continuing to invest in my pension, but I'm looking at this separately because this is money that I will be able to access and take out whenever I want. Whereas with my pension, I cannot access that money until I'm 55. And also they're planning to increase that age to 57, I believe, in 2028. I can't remember the exact year. If that's wrong, I'll put it up there. But the point is, I can't access that money for a long period of time. However, at 40, I would be able to access this money. I don't plan to use it, but it's important to note that's the reason why I'm basing it just on that and not factoring in my pension, leaving that separate. Now, Why is £100,000 important? That figure is important in investing because that's when compound interest really begins to become even more effective. And I've got a couple of variations and scenarios to share with you, just so we can see the potential of what that money could grow to. So that is why that 100K, I'm sure maybe you've heard of it before. That's why that figure is important. That compound interest on your money becomes even more effective once you get to that mark. And that is why I'm aiming to get to over £100,000 by the age of 40. Even if I don't reach it, but I can get as close as possible to that figure, I will be a very, very happy woman. Now, let's get into the projections that I've done. So like I said, the aim is 100K by 40. You know, we got 10 years, let's make it happen. My ultimate aim is to be able to retire by 55. Now, that may sound crazy, that may seem impossible in this current economy, but looking at my figures and my projections, it's not impossible. Also, I've seen people that have been able to do it. Granted, their context was different to mine, but it's possible. The decisions I'm making, the way I'm trying to structure my finances is to make this a reality. I'm not just wishing and hoping, I'm praying, and I'm also putting in the work. So that's my ultimate aim, which is why I want to get as close to the 100K by the time I'm 40. I've then gone into this rabbit hole of looking at my FIRE number. I'll probably share that in another video if you are interested in that, or you're like, what is FIRE? So FIRE is Financial Independence Retire Early. It's a movement I've heard about for a while, but it's never really something I've dived into for myself. But I'm now on this journey of really getting in motion for that, because I would like to retire early. Whenever I'm having a bad week, I'm like to my husband, I'm ready to retire. But realistically, I can't retire right now. Retiring by 40 is not realistic. It's not impossible. I mean, if my business was to take off and I was to become this, you know, famous writer and all these things, like those factors, there's things that can happen, but I'm not basing it on those things. I'm basing it on more the realistic aspect of things, but it's not impossible. But my ultimate aim is to retire by 55. So let me get into the figures. So assuming what I've shared with you previously happens, I'm 40 years old. I'm alive and in good health. That's the vision. That's the dream. I've reached that point where I've got over £100,000 invested across my investment portfolios. If I was to continue investing an average of £200 a month over the next 10 years, by the time I'm 50, and I've then tweaked a few things. So if I was to increase my annual deposit by 10% a year with an average return of 16%, I would have over £500,000 invested. So just over 500,000. Now for me, I've never seen that many zeros in my life. So just to think about getting to that stage at the age of 50 and having over £500,000 across just that. I'm not thinking of other investments that I would like to have over the years. I'm basing it on what I'm doing right now. That was mind-blowing for me. Again, 16% is high, but I'll share some other percentages with you. If I was to get an average return of 14%, I would have just over £470,000 invested by 50. 12% would be just under 400,000. 10% would be 331,000, just over that. And at worst, let's say 5%, it would be 212,000, just over. So slightly under 250,000. Now to get to 50, not factoring my pension, and to be able to have that in my investments, that's the motivation I needed to really become more committed to investing on a monthly basis in 2026. I know there's going to be things that I want to do. There's going to be holidays, there's going to be weddings, there's going to be life events that will pop up. There's going to be twists and turns in life, I know. But just seeing how possible it is, I'm definitely going to make it a priority in my budget in 2026. We are going to be investing on a monthly basis. Even if it's £10, I'm going to put that £10 to work. We're not playing no games in 2026. But looking at those numbers, I was like, wow. And of course, getting to 50, I'm not going to keep investing the same amount. I've done it based on what I'm doing now, just for me to see potentially what the figures can look like. And also, my plan as I increase my income is to increase how much I'm investing. But I'm basing it on what I'm doing now, just to be able to see what that could look like. I've also done another variation to show to you. So if I did a projection based on if I was to increase how much I'm investing a month to an average of £350. So remember, this is at 40, right? We're trying to get to 50. and what that number could be. However, I've changed the annual increase from 10% to 5%. If I was to get a 16% return by 50, I could potentially have over £600,000 invested. Now, we'll do the other side. If I was to get an average return of 5% from 100,000, just over 100,000, I could have £231,000 invested by the time I'm 50. Hearing those numbers, looking at that, and now initially when I reviewed my portfolio, I didn't have a specific number in mind. I wasn't thinking about trying to get to 100K by 40. 100K has always been a figure I want to get to, but I never really had an age to it. But when I looked at the trajectory of my investment on what that could get to by 40, I was just like, wow. One, I was really proud of myself, the fact that I just started, because I think a lot of the times when we're starting something and we're starting small, we can really just be discouraged by that and think, oh, what's the point of me investing? What's the point of me saving if it's only a small amount? I share this to say to you, there is a point. If you don't start, what you can times zero by a million, what you're going to get is zero. So the point is to just start with where you're at. Now, a couple of factors. I have no consumer debt. So this makes it a lot easier for me to be committed in investing because I don't have any consumer debt. The only bills I have to pay are my bills and the cost of living. But thankfully, that's something that in my 20s, I ensured that I got into gear. Starting off my early 20s, I was in a chokehold to overdraft. Halifax overdraft was really taking my paycheck every month. But I got myself into shape financially and I stopped doing that. I learned to build my credit in a healthy way. I started my finance coaching business in 2020, got my financial advisor qualification, and the journey that I've been on the last couple of years is not only helping others with their finances, but also building and applying the knowledge that I've learned to my own life. I'm not, just telling people to do something that I'm not doing. I'm practicing what I'm preaching. I always tell people to start where you're at. And so there are times when I have to remind myself to take my own advice and start where I'm at, which is also why I'm here sharing this video with you. Sometimes I think, I'll start sharing on YouTube again once I buy a new camera. But it's like, I'm just going to keep moving the goalposts and I'm never going to do it. So I'm here. I'm recording on my phone, my Google Pixel, and I am posting. I'm here in my living room. I'm not in a studio yet, but one day my hope is to have a podcast studio that I can go to. But for now, this is my podcast studio. This is the setup. It's not perfect, but it's real. It's me. And I hope that my journey can inspire you. And also I'm posting this video because I want to come back to this video when I turn 40. I don't know what my life is going to look like. Right now, I'm married. I've been married for 7 years. I don't have any children. Having children was not something that was really like something I wanted. You grow, you age, things change, desires change. It's definitely something I'm considering a lot more in the near future, but not too near. But I want to look back when I turn 40 at this video. 1, to see where I'm at. 2, to see whether my projections were accurate. If you follow Mr. Beast, I don't really follow him, but he pops up occasionally. And I know that he posted a video. Well, he didn't post it, had in his archives for 10 years to his future self, like to see where he'd be. And I want to do the same for myself. In 10 years' time, when I turn 40, I want to come back to this video and to see where I'm at financially, to see if I've gotten to that 100K mark. Maybe I would have superseded it. Maybe I won't even be close. But one thing I do know is at least I would have tried, and I'd be able to look back at my 30-year-old self and say, girl, do you know what? You had some grit to you. And I can be proud of that, irrespective of what may happen over the next 10 years. Another thing that I wanted to say as well, this has taken me on a rabbit hole to then start thinking more about what financial independence looks like to me, what age I want to retire. As I said to you, I want to be able to retire by 55. Now, I'm the kind of person, I like doing a lot of things. So one of the things I'm passionate about is finances, which is why I like sharing content on this. But also there's so many other things that I'm passionate about. I'm passionate about just building a healthy life, relationships, marriage, love. There's so many things I'm passionate about. There's a book that I've been working on for the last 7 years, and I'm really hoping in 2026 I can just finish the book and publish it. I don't know what that's going to look like. Even if it just sells one and it helps someone, then that will make me happy. But I'm going to wrap up this video because I have been rambling on a little bit. I hope you enjoyed this video. Let me know any comments. Let me know any questions that you have. If there's anything that I spoke about in this video that you want me to go deeper in, do a bit more of a deep dive in another video or in another episode, then do let me know. One of the things that I said to myself is for 2026, we are going to be bolder. I'm going to be overthinking a lot less because a lot of the times there's so many things that talk me out of doing things. I'm like, oh, I don't really want to talk about investing. I don't want to be, putting my business out there. It's like the Jamaican in me. I guess it's not just Jamaican. I feel like a lot of the Black community were like that. We're like, yeah, we don't want people to know our business and all that kind of stuff. But you know what? People are getting paid to share their journeys and their business. And not only that, I like watching other people's journeys and, seeing where they've started from. So why not do the same for myself? So 2026, I'm already starting my 2026 now. So I'm showing up, I'm sharing my journey. I'm not going to overthink things and feel like everything needs to be perfect. It's not going to be perfect. So if you're looking for perfection, amazing editing, the makeup on fleek, this is probably not the right channel for you. But if you're looking for realness, if you're looking for someone who's authentic, who's going to show up, who's going to be real, who's going to be honest, who's not going to be out here trying to scam you or give you advice that is not healthy, then stick around, subscribe to my channel. If you are listening on an audio platform, like I said before, do subscribe. If you're able to leave a review, please do so. Those kind of things make such a huge difference for the algorithm. It allows other people to be able to see the content. Share this video with a friend. Another thing that I do want to talk about, like I said before, is my FIRE number and my kind of journey with that. But if that's something that you'd like to see, let me know. I'm back on YouTube. I can't tell you exactly what I'll be talking about because I'm exploring, I'm figuring it out. I want to get to a stage where I'm enjoying creating content again, because earlier this year, I really was in a slump and I wasn't enjoying it. And I was just like, I don't really want to do this. It's just overwhelming. You're putting so much effort, not seeing the results that you want to see. I'm like, what's the point? But I'm just taking the time to explore, to enjoy, and I just want to share my journey with you. So if this has inspired you, if you've enjoyed this video, then please like, comment, subscribe, and I'll see you in my next video. I did it. I actually recorded. I'm so proud of myself. All right, bye guys.